What if I told you that right now is the best moment to invest and that you can make a lot of money with it? Everybody's talking about recession and how everything is going to be bad. They say that you have to put your money in safe assets and to stop investing. But this is absolutely wrong. And that's why I want to show you the 5 reasons why you should start investing now rather than stopping. So at number 1, we have the fact that prices are super low. These last years have been very difficult for everyone, with the Ukraine war, with the COVID period, and all this has greatly affected the global economy. Now we have banks failing because of inflation and consequent increase of interest rates, and the result of that is that the markets are going down and down without giving signals of recovery. So a crisis might be coming, and it could be very harsh, and the prices could go even lower, and this is clearly something very bad for the whole economy. However, it is also a once-in-a-lifetime occasion to make a lot of money. This is because during crisis, the prices always go down, and a lot of people lose money with their investments because they sell everything at this moment. But the prices are super low. I mean, would you sell your house when the prices are super low or when they are high? I would clearly sell it when they are high, so that I can make the most out of it. The same applies for stocks, so as for when there are sales in a shop, during crisis it is the best moment to make investments because the prices are super low. Secondly, you can make money really fast. When there are crises, a lot of people lose enormous amounts of money because they sell everything they have. But there is also people that at the same time earn incredible amounts of money. And you want to be part of this group. After every crisis, the market always goes up very fast, and this means you can make money really fast. For example, during the 2008 crisis, if you had invested when the market started to go down, after just 1 year, you would have had a return of 30%. This means that just investing $10,000 during this period of crisis, in just 1 year, you would have made more than $3,000. And all the same can be said for the COVID period and also for all the other crises in history. And this actually is one of the big learnings of this video, because during crisis, you only have to think about investing and investing as much as you can, because anyway the market is going to go up again in the future. And not investing during this period would mean to lose an important opportunity to make a lot of money. This point is actually super important because over the long term, it can make an incredible difference. As for short-term investment, you can start your long-term investments during this period of crisis, but your objective is now to hold this position for years, if not decades. The impact could look smaller compared to the short-term investment because of the time frame. But actually in reality, this big push that you have in the beginning makes an enormous difference over the time, and it gives you an enormous advantage. Imagine that if you had invested $10,000 during the 2008 crisis, after 10 years you would have more than $34,000. But if you had invested this same amount of money just after the crisis, you would only have $24,000. So, regardless of the type of investment that you make, during crisis think about making investments so that when you go out of this difficult situation, you'll be able to be even richer than before. Fourth, right now, you can't keep your money in the usual safe places as in the past. I think we've all heard lately about Silicon Valley Bank. It is one of the world's biggest banks, which focuses on investing and financing startups. And just a couple of weeks ago, it has failed. After that, even Credit Suisse, one of the largest banks in the world, is risking bankruptcy. And the important thing to understand now is why SVB failed. It is because their strategy was to make the safest investment possible: bonds. However, central banks have been increasing the interest rates over the last year, and this makes the bonds to lose their value. And why are they increasing interest rates? Because the inflation is going up and up. And this same inflation is eating little by little your savings in the bank, because all prices are going up, but your money is there sitting in the bank doing nothing. And this means that both bonds and banks are extremely risky right now, even if they are considered super safe. Fortunately, there is one way through that, which is investing in the stock market, because anyway it's going to go up again, and like this your savings are gonna catch up the inflation and even surpass it, as history has always shown us. Finally, you have your best friend that is there to help you all the time. There's never a better moment to invest than today. Not tomorrow, but today. Firstly, because you can never predict how the market is going to go, so you don't know if tomorrow will be a better day than today. Secondly, because you have your best friend that is always there to help you and make your money grow. And this is compound interest, which allows you to exponentially grow your portfolio over the time. And it does that the sooner you start investing. Every year and every day count when talking about compound interest, because over the time they can make a huge difference. Just think that between investing $10,000 for 20 and 30 years, there is a difference of more than $100,000. And thanks to all the other reasons stated, its effect is gonna be even stronger compared to normal situations. So don't lose this opportunity to start investing or to invest even more. It doesn't happen often to have such an opportunity, and it is really important to catch it because over the time it's gonna make a huge difference. And if you don't know how to start investing or what compound interest is, watch these videos.